Hello, everybody. Happy Monday. Happy new week. And welcome to this live stream. I just want to make sure I got the technology working and then we'll be right on our way. It's looking good on my end. So I hope you had a wonderful weekend so far. Now let's get into it, right? Now, if you experience what happened on the market last week, gold and silver actually fell the fastest rate we've seen in over a decade. Bitcoin didn't follow too far behind. Bitcoin is down now to about 78,000. In sometime in October, November of last year was up all the way to 120,000 a Bitcoin, right? So the natural question is this random? No, it is not random. It happened because one, President Trump sent out some information, and as you know, the market rises and falls based on President Trump's tweet. But it's even deeper than that, and I want you to stay with me in this video because you're going to learn something that you might not know already, and that is going to help give you understanding of when these things happen, right? So if you're an investor, you need to understand why this is happening. It is critical, especially for your long-term investments, right? So to understand this move, we have to start with the Federal Reserve. And let me explain this, right? The Federal Reserve is the central bank of the US. But many people don't realize that the Federal Reserve is not actually an arm of the government. It is independent of the government. That's why you've been hearing a lot of conflict between the president and the Federal Reserve chairman, because the president cannot directly impact what the Federal Reserve does, right? Now, what is the role of the Federal Reserve? The Federal Reserve, as the central bank in America, actually controls the interest rates, money printing, right? So, despite the name, as I mentioned, it is not a US government arm. It was designed to be independent from politicians and their ways of doing things. So that way, the decisions of the Federal Reserve has nothing to do with whether one party wants an outcome or another party wants that outcome. It doesn't have anything to do with the lobby groups or with the most powerful businessmen who have representation in the Senate or in the House. The Federal Reserve is independent and they work only in one interest, the interest of the US people and the economy. So when the Federal Reserve is looking at the economy and trying to make decisions, they are making decisions that is best for the economy and the country at that time and in the future. That is why you would have noticed President Trump has had a lot of conflict with the chairman of the Federal Reserve because he keeps wanting the chairman to lower interest rates, and the chairman is like, no, you're not my boss. I'm not going to do that, right? But it's important to also understand that this independence is exactly where the tension has been, like I've mentioned. And that's exactly where President Trump actually has been having a lot of challenges. Now let's do this. I just wanted to make sure I'm able to see your comments. Go ahead and comment live, right? Comment live because there's a live comment. Feel free to comment in this video. Drop your questions if you have any questions for me, and I'm going to respond to them. Now, President Trump and the Fed have had conflict over the interest rates. President Trump believes interest rates are not dropping fast enough. He has insulted the Fed chairman. He has tried to humiliate him to the point where he finally filed a lawsuit against him, right? And certainly, President Trump has reasons why he wants why he wants the interest rate to drop, because he wants the US dollar to become weaker. He wants people to be able to spend more money and wants that to generate more activity in the US economy. And in the long term, he believes it's going to help bring manufacturing and manufacturing of goods and services back into the US. But that's a story for another day, right? He wants more stimulus to the economy. That's why President Trump is pushing that they should cut the interest rates. He wants the US to have the lowest rates among developed nations so that more Americans can be able to buy stuff. You have to understand how the US economy works. It's a capitalist economy, and the economy only runs because of consumerism. So when consumers don't have disposable income to buy extra stuff to spend on purses, on Gucci bags, on Louis Vuittons, on wine, champagne, vacations, new cars, the economy suffers. But for people to have money to buy those things, the interest rate needs to be dropped from the central bank so that regional retail banks can be able to give loans at the lower interest rates. And when they can give loans at the lower interest rate, what that means is more people now are able to borrow money And now that will spur additional money in people's purses, and then they'll be able to spend. And when they spend, companies make more profits, companies can hire more people, company value can rise, the stock market will be on fire, people will make money, and the economy will just keep trucking on. That is the goal. That is the behind the scenes thinking of President Trump. Now, there's no right or wrong way, right? But I just want to make you understand why gold and silver, along with Bitcoin, fell a lot last week. And it is important to understand, therefore, that his strategy of questioning the Fed independence, even suggesting that the Fed should be brought in as part of a government arm, is so that way the executive arm of the government can have control and determine these things. Now, understand this. This brings us now to the announcement that shook the markets, right? And I want you to pay attention here, because this trigger event is actually what changed. Now, you need to understand that Jerome Powell, who is the chairman of the Federal Reserve, his mandate ends in May of 2026, in about 3 months, right? So Trump announced Kevin Walsh as the federal chairman pick. Now, this triggered sell-off in gold, silver, and Bitcoin, and I want you to understand why. Why would one name cause prices to drop so significantly? Pay attention here, right? You don't need to be a sophisticated investor, but just understanding a little bit how the economy works, how some of these things impact the rise and fall of your stock prices will help you stay in the game. Remember, if you're a long-term investor, you shouldn't panic. Just be patient. Don't even watch the news. I usually tell people. But it's important to also understand a little bit how the economy works and how these things impact the larger picture, right? So why people buy gold? You need to first understand that. Why do people invest in gold and silver in the first place? You need to understand that all the way till 1972, the US currency was backed by gold until they decided that it was not going to be backed by gold anymore. So the paper, the dollar notes you have, the coins you have, it's not backed by anything. It's just buy back the full faith and trust of the US government. So now many people still believe the asset that holds the greatest value in real value is gold and silver, right? So you need to understand stocks grow through profits and innovation. Gold is actually like insurance, because there's really no growth. You buy well, there's growth, but it's not as volatile as regular stocks, because you buy a piece of gold, let's say 1 ounce of gold, it's just there looking at you, right? It just depends on the demand and supply of that gold that will determine exactly the price of that gold, but the intrinsic value of the gold is still there, right? So people generally buy gold and silver when they fear inflation, when they believe that the dollar is going to be weaker, which means people will need to spend less to get a dollar. That's when the dollar is weaker. That means Americans will have to spend more dollars to do the same thing they used to do out of America if they are spending the dollars in the country that is out of America. That means they have to spend more dollars. By spending more dollars, it means the value of the dollar has decreased. Now you need to understand this, right? History is going to help us show us exactly and very clearly why this is the case. Stay with me here. And if you have any questions, go ahead and drop down in the comment section, right? But I want to take you back a little bit. I want to give you a historical context, because this is going to really help make you understand how this whole thing works, right? Now, generally, gold beats stocks mainly during major crises. The only time the prices of gold surpasses the prices of stocks. What I mean by that is, like in recent time, if you notice the whole of 2025, gold grew faster than stocks, gold and silver actually. So those who invested in gold and silver most likely made more profits, right? Apples for apples than stocks in general. But here is the deal. You have to realize gold and silver only rises beyond stocks in times of fear, in times of major crisis, in times of doubt. The last examples you can think about is like in the time of the Great Depression, right? In the 1970s, also when there was stagflation. If you remember the dot-com crash in the year 2000, the early 2000s. If you remember the 2008 housing crisis, and as recently as the post-pandemic era, right? And if you look at all these different times when gold and silver was more valuable and the prices rose faster than the prices of stocks of company, You identify a similar pattern. There was either fear, there was a crisis, there was doubt and lack of trust in the strength of the US economy and the US dollar, right? So generally, this signals fear. And why are people suddenly so worried about the dollar? That is the natural question you should ask, right? Number one, massive government spending. The government debt has been increasing astronomically. Government has been spending significant amounts of money. Donald Trump even announced recently that they are going to spend even more to bolster the military, to develop more sophisticated and cutting edge, innovative military weapons. And you have to understand this. When those expenses have to happen, the government will certainly normally the government is supposed to have revenue from taxes and increase and use that, right, for expenses like that. But a lot of times the taxes is not enough to cover the government debt and give them that latitude to spend on infrastructural development, military, and all that stuff. So what the government does is it goes ahead to print money out of thin air because they have the machines, right? So one of the reasons why gold ran up is because of this fear, the fact that government has been spending massively, and people are worried that the money they are spending, they are just printing it out of thin air, and that might cause inflation. Number two, of course, the inflationary pressures, like I mentioned, people are also worried that because they are printing so much money, then the supply of money increases, prices of goods are going to rise significantly, and it will cause inflation. So people want to save themselves by investing in gold and silver. Now, you also have to understand in recent times, too, with Donald Trump's policies, a lot of foreign governments have been investing a lot more in gold. You have to understand the US dollar is actually the global trading currency. But sometimes during times of fear like this, a lot of foreign governments start reducing the amount of their country's money that they hold in US dollars and start buying gold. And that buying increases demand, and that demand pushes up the prices of gold and silver, right? And naturally, of course, the uncertainty around the Fed. But here is what really happened. This is where Kevin Walsh comes in. Kevin Walsh actually is the next Fed chairman that Donald Trump has announced. Now, Kevin Walsh actually has a history, and I want you to stay with me here, right? I want you to understand how these things are all tied up. Kevin Walsh has a history because he's a former Federal Reserve governor. Now, he served during the 2008 financial crisis, and he's known for very cautious and diligent policies around inflation and around printing money, around just reducing interest rate and making money available to drive the economy forward. So what that means is, therefore, once Donald Trump announced his announcement in the financial community, they know this guy. They know that he is publicly, they know that he has also publicly supported Fed independence, and he's a very fiscally careful person. Now that gave Wall Street a sense of relief. I want you to understand me here, right? They felt a sense of relief now that, okay, they have somebody who certainly is going to be a little bit more careful, but somebody who also might work with some of the things that Donald Trump wants him to work with, right? And then also, because of certain policies that he is used to and historically he has stood for, like like not lowering interest rates too fast, like being able to be fiscally disciplined. Now Wall Street realizes that, hey, you know what, that will prevent the dollar from getting weak, that might prevent inflation, and so it permits them now to feel a little bit more relieved, and they can go ahead now and start moving money back into stocks and companies and bonds, right? So why did gold, silver, and Bitcoin fall? I hope you're following me all the way to those points, right? Investors now, investors now started feeling calmer. Because investors started feeling calmer, they started taking their money now out of the investments they had made in gold and silver and started moving in now to buying companies like Nvidia, Apple, and all those usual things that they generally buy, right? There become less fear of runaway inflation just because Mr. Walsh has a history of managing the interest rate. So people feel more confident that inflation is not going to skyrocket and start affecting the amount of money they have in their pocket and how much they can buy with that money, right? Now they also realize that it's not necessary anymore to reduce a lot, to hedge a lot of their risk with gold. Because naturally, historically, gold and silver grow slower than traditional stocks of companies and ETFs and index funds. So every right thinking investor would like to invest most of their money in a vehicle that grows faster, which is index funds and regular stocks. But now the people moved over to gold for the reasons I explained earlier. Now they are calmer because Mr. Trump has appointed Wash, and Wash has reassured people by the history of his performance and where he voted, how he performed, how he worked as a governor of the central bank, right? Of the Federal Reserve, sorry. People can determine that he is going to do certain things that is giving them peace, right? Bitcoin fell too because the risk appetite naturally shifted. People felt like, you know what? Yes. Don't forget, Bitcoin is not federally regulated. Nobody regulates Bitcoin. Bitcoin is an open, unregulated market based on trust and technological systems, right? So what happened is, even though people invest in Bitcoin, but a lot of people know Bitcoin is not yet proven. Bitcoin is the risk for Bitcoin is higher than the risk for many other traditional assets that have been there for years and have been proven. So because the risk appetite for most people started dropping, most people started selling their Bitcoins and moving their money back into traditional investments, right? But you have to understand that the fundamentals weren't the only reasons why this happened, right? Human beings also have a tendency to speculate and panic. You must always realize, especially if you're investing, you must understand that investing is a behavior most of the times. Human beings behave how they feel. It's not usually anything to do with logical thinking. Because if it is logical thinking, most people will realize that it's just a matter of time. Be calm, keep your money invested in index funds and companies that are proven, give it some time, it's going to build value. The statistics show it, the stock market grows by 10% averagely a year. That is over the last 100 years. So any right-thinking person who has the ability to manage themselves will realize that if you just hold your money invested in the stock market for any 10-year period, the stock market rises, the stock market is positive 78% of the time. So if you hold your money in the stock market any 10-year period, you have a 78% chance that you will make more money and only a 22% chance that you lose money. That is great odds, right? Remember, even coming alive as a human being, you were one out of 400 million sperms. What was the odds for you to be alive today? You have better odds winning on the stock market, holding your investments for a longer time than even the fact that you would have been born. So another thing you need to understand is people speculate. So people like fast gains, right? Fast gains attracts speculators. Another thing, many people bought without understanding the asset they were buying. A lot of people just buy assets because somebody said it's good, because they listen to some YouTuber. And by the way, when you listen to me, I'm not giving you any financial advice here. Go do your own research. Spend some time understanding exactly how these things work, right? A lot of people listen to financial YouTubers like us and they just start making decisions without thinking for a minute. A good investment for me might not be a good investment for you. Your timeline of investing might be different from mine. Your goals of investing might be different from mine. The reasons why you are investing, you might be a short-term investor, not a long-term investor like me. So all those things determine the kind of assets you invest in. And generally, this is what I tell the people I coach, people in my private communities. And by the way, if you've been wondering how you can improve your finances, if you can learn exactly how to determine what kind of investments to make, what kind of stocks, ETFs, and index funds to buy, right? I am hosting a webinar on the 26th of February. And look down in this video, you will see the link. Click on the link and reserve your space. That webinar is actually for people who are trying to accelerate their life, people who want to have clarity as to how to invest and grow their money safely without losing their money, without any kind of doubt, and without any kind of worrying about what is going to happen next, right? So I'll be hosting that on the 26th of February, and I want you to join me in that. All right. Another thing I want you to realize is many people buy assets and they don't understand what those assets are. Right? Many people buy assets and they don't understand the asset. And then by the time the prices start dropping, then they start panic selling, accelerating the decline. So understand this. A lot of people buy at the top of the market. What does that mean? Just give me a minute. Let me try to get my screen back, myself back on the screen. I think I disappeared. A lot of people try to get themselves back on a lot of people buy assets at the height of the market when these assets are too expensive, right? And when they buy the assets when it's too expensive because of hype, because they've heard other people talk about it, they go ahead and buy the assets at the price that the assets are, and the assets are so expensive. Now, when fear comes because they were speculating, when fear comes now, what do? They quickly try starting to sell the assets. And they start selling the asset when the market is dropping. And as they start selling, they're of course going to sell for a loss, but because they're also selling, they're perpetuating and making it faster for the decline to happen. And so this is generally what happens, right? Let me see. Let me just get another screen up on my screen here, just so that way we could make sure we can see each other. Okay. Let me see. Just a minute. Let me make sure I have. Okay. Wonderful. I'm trying to make sure I get the right screen so you can at least see me very clearly. Okay. So, anyways, now think about it this way, right? Now the real question becomes, what does this mean to you? Let's get down now to you. What does this mean to you? You watching me right now, right? How does this apply to you? What is the core investment lesson you are learning here? What is it? What is exactly the takeaway I want you to take home? Number one, you must understand wealth is not built. Wealth is not built by chasing investments. All right. It is built with a strategy. Every asset moves in cycles because there are many paths to wealth. History proves this again and again. Think about it this way. In 2008 to 2012, gold surged due to money printing, right? Inflation fears faded, stocks took over. Immediately, the inflation first faded, stocks took over. Now, in 2020, stimulus reignited gold. Because of the stimulus packages that came in, there was a lot more money in the market, and people had money. And so prices of goods rose and inflation kicked in very strongly. What happened? People got scared and started moving their money back into gold. Now, when the headlines change, the cycles repeat. You need to always understand this. So when there is fear, when people worry about inflation, there is a crisis, people will move their money into gold and silver. And as soon as that is over, people start feeling more confident and comfortable, then they move their money back into regular assets like ETFs and index funds. And this is where most investors go wrong, right? Most investors go wrong because they make some very common mistakes. And I want you to avoid these mistakes the best you can. Listen to me and understand this. Reacting emotionally to headlines. Avoid reacting to headlines. In fact, if you are one of those who watch MSNBC, CNBC, and all those things all the time, you know what? Stop watching them. Hear from me. Nobody knows the outcome of the market next week. Those guys, the best they can do is speculate from historical facts and project, and a big part of it is entertainment because the market doesn't go up in a straight line. The market goes up, goes down, goes up, goes down, goes up, goes down. But in the long term, it is trending upwards. And so what that means is nobody can tell you exactly what is going to happen tomorrow. But if you stay long enough, you will see times of great progress, sometimes of jobs, but overall, it is going to rise. The second mistake a lot of investors make, and you must pay attention to this, changing your strategy overnight. That is why it is important to understand certain things before you start investing. A lot of people just jump into investing without understanding exactly why they are investing, what is the goal for which they're investing, how to invest, what assets to invest in. These things are very important, and I'll be teaching a lot of these things in my upcoming webinar. If you want to learn these things, join that webinar. It is a very, very educative and empowering webinar. It's going to change your life. It's going to give you clarity. It's going to give you confidence to invest like a seasoned investor and build wealth over time. Following random voices online. If you know exactly what you're doing, you have a strategy, you have an idea how long you want to invest, you are a long term investor, you're not investing for the short term, you're not trying to chase quick wins, you're not trying to chase speculated assets, right? You wouldn't really generally follow random voices on social media. You first of all educate yourself. Yes, these voices also help with education, but you can cross check the information. You can go verify the information. All the information I share with you on the line, go verify it. Find out for yourself, right? Don't just take my word for it. The other mistake a lot of investors make is they speculate. I see people who have 90% of their investments in crypto. You are going to be burnt. That's pure speculation. In fact, you never invest 100% of your investment in one company. Talk less of one asset that is not even proven. Despite the fact that all the companies I invest in are proven companies like Microsoft, Nvidia, Apple, I only have 40% of my investments in individual stocks. 60% of my investments are in index funds and ETFs because these are baskets of stocks. And I know that at every point in time, these ETFs will always grow. They might not grow fast as an individual stock, but they also do not drop as fast. And it minimizes my risk because if one company is doing badly in the basket of companies, some other companies are doing good. So there's always a balance, right? The second thing, I never have more than 10% of my investable capital in one asset. I want you to understand me here because people really don't understand. You will go to a barbecue, you will go hanging out with some friends, and you hear them talk about a new company called this. That company is making money, you should go invest, and you carry your money and you go dump it in that company. I know that because I've been through that mistake. I have lost $80,000 investing in the market based on things people talk. I have shown the account many times. Look at my previous videos, you can see that account, right? So I understood after that that listen, this investing thing is not a game. You just don't jump in and start doing things that don't make sense. You have to do the common sense, boring, long-term view things, right? No speculation. Don't try to speculate about the prices of Bitcoin and you take 50% of your money and you go put in Bitcoin. I invest in Bitcoin. I actually encourage people to invest in Bitcoin. Don't do it because I said so. Do your own research. But Bitcoin, I believe, is something that has value and will have value over the long period of time. But trust me, only 5% of my assets are in cryptocurrencies, including Bitcoin. I cannot take the chance to put a huge amount of my money in that. What if it doesn't work? What if it doesn't work? Just because I heard somebody say Bitcoin is going to be $1 million in 10 years, and I just think that's what it's going to be, and I take all my money, go put it in Bitcoin. That is one of the critical mistakes investors make. Don't make that mistake, all right? So emotion creates opportunity for disciplined investors. You must realize that the market runs on emotions. When Donald Trump tweets something, oh, I'm going to attack Iran, the market starts getting afraid. Emotions rise. What happens? People start selling their stocks. What happens to prices? Prices start dropping. And those who are selling, who bought high, they are selling low, they are losing money. But you, who is a disciplined investor, if you're part of my community, you are disciplined, you are long-term focused. If you've been listening to my videos, you know how we do it here, right? You be patient. When those prices drop, that's when disciplined investors like you scoop up those stocks at a discounted price. You know, I always say the stock market is a very funny place. It's the only place where people refuse to buy things at a discount. Everything else people want to buy at a discount, even things they don't need. People go out shopping, buying clothes at 50% off just because it is 50% off, even when they don't need it. But when they're selling a company like Microsoft at 20% off or maybe 10%, the price dropped by 5, 10%. Instead of scooping it up at a discount, people are hesitating, right? So you need to understand this. Keep this in mind looking ahead into 2026. I want you to keep this in mind. 2026 will be more volatile than last year. Historically, the second year of the president, especially when there is elections, right? It's generally volatile. There is certainly more policy uncertainty. As you know, there are struggles between the White House. There are certain policies Donald Trump is trying to move forward. He's trying to move the economy in a certain direction, right? That I will do in another video. There are there are two ways the economy is trying to go. He's trying to move it in the way of lowering interest rates, reducing the value of the US dollar, and making American goods more palatable for people to produce those goods in America. That is his strategy. I don't know for sure because I haven't seen his strategy document, but based on his behavior, that's what I think he's trying to achieve, right? There is another way of doing it the way it has been done the last 40 years with globalization. But that's a story for another day. The other thing you need to keep ahead in your mind, understanding going into 2026, the market is going to benefit the investors who are prepared, disciplined, and patient. Those who are prepared, disciplined, and patient, the market is going to reward you and reward you very handsomely. Now, let's understand this. I wanted to come on today to give you a sense of understanding why exactly gold and silver have been dropping, even though they run so fast. If you are just joining me right now, you can go back and watch the video. It's a very packed video. It might not be very interesting just because I talked a little bit about the economy, but these are things you need to understand. You need to understand that the people who win on investing in the stock market are the people who do the boring and uninteresting and unsexy stuff. If most of your investments are in sexy, nail biting, in assets that people talk about at parties and everyone is bragging about, know that you're probably making a mistake. The people who build wealth on the stock market, they don't invest in shiny objects. They don't invest in the baddest company or the newest company in town. They invest in assets that are proven, assets that can stand the test of time, assets that have been proven to deliver value over time, right? So this is exactly what I covered in this video. I hope it makes sense to you. By the way, again, as I mentioned to you, I'm actually hosting a webinar on the 26th of February, right? And that webinar actually is a webinar called Clarity, Wealth, and Legacy Blueprint webinar. I'll be touching on these three critical pillars because a lot of people fail with investing because they don't have clarity. Because they don't have clarity, they don't know what to invest in. Because they don't know what to invest in, they don't even know how to invest. Because they don't know how to invest, then they listen to voices that are not trained. Because they listen to voices that are not trained, then they invest in the wrong assets. And when they invest in the wrong assets, they lose money. And when they lose money, it affects their wealth. And when it affects their wealth, it will naturally affect your health and it will affect your life. So this stuff might sound simplistic. It is not. Look in the link down in the description of this video. Click on it and join me in that webinar on the 26th of February. It's going to be a 1 hour, 30 minutes webinar, and we have two categories of tickets, right? We have the general admission tickets, and we also have, let me actually just share my screen with you. We have the general admission tickets, and we also have the VIP ticket. Most of the people who've already reserved, they've reserved the VIP ticket. And the reason why is simple. The reason why they reserve the VIP ticket, because as I will show you in a few minutes, you realize that the value really lies more in the VIP, right? So these are the things, these are the transformation that you get in your webinar package. This is the complete webinar package, all right? You have a 90-minute live webinar with me. That's the main event. You actually have the Wealth Clarity Workbook, because this workbook is going to help you give you a clear picture of your current income and your spending audit, your ideal financial picture, the income structure model, right? Your savings, things like your personal net income move. We also have a 90-day money plan template that is valued at $147, right? And then The webinar replay access, you have that for 30 days, because I understand a lot of people might watch it, but you cannot make complete sense from the live webinar because it's 1 hour 30 minutes and there's so much information I'll be sharing. So you can go back and watch the webinar again and again and again as much as you like, and that is for 30 days. You're also going to have the accountability sprint, which means you join our community and we'll guide you within 14 days. We'll continue to guide you, encourage you, and give you check-ins that will help you continue to build wealth. You also have the bonus ultimate investment playbook. And now this is a total package of 1,399. But I'll be offering this package to you for $197. Now the general admission package, let's do this, right? The general admission package is actually contains the 90-minute live webinar. It contains the Wealth Clarity Workbook, the 90-day plan, the webinar replay, and the 14-day accountability sprint. And it also contains the Ultimate Investment Playbook, right? That is $97. But for people like you watching me right now who really care about speed, who need to upgrade faster, and they don't care too much about saving a small amount of dollars, you can get the VIP. You should actually get the VIP. That is our most in demand of the offer. The VIP includes the general admission, but in addition to that, you get guaranteed question and answer time with me. So if you have a question, you are guaranteed that I'll answer that question. There's also going to be an extended live session because this is going to be 1 hour more. So you're going to spend a total of 2.5 hours with me. In addition, I'm going to share something which is not shared with the general admission people. This is the 50, 10, 20, 20 income structuring calculator. This is the calculator I use with my own income, and I've been able to build about $1 million and plus in liquid assets alone, not including other assets like land and real estate, right? And I'm just a regular guy who worked regular jobs and organized myself. That's why I'm doing this seminar, because it's all about clarity, guys. It's not about the amount of money you make. It's all about clarity, understanding, having structure, and being able to develop that confidence to invest, knowing that you are going to build wealth. Taking away guesswork, taking away the pressure, taking away the necessity to make decisions that don't make sense and to regret later, right? So part of the VIP package is the 50, 10, 20, 20 income calculator. Also, you have the VIP only bonus, the Wealth Architect Playbook. You also have early access to our future offers. There are a lot of things we are planning to do this year. It's going to be an incredible year. A lot of things are coming through, and you'll be the first to learn about that, right? So go ahead down in the comment section, look at the description of this video, click on the link, and register to secure a spot for this webinar. We have a limited number of people, as you can see. We have a limited number of people who we are going to accept in the webinar. The reason why is because I don't want 1,000 people. I will not be able to answer 1,000 questions, right? I want a small number of people so I can really give them the value that they came for and even more. Trust me, this will be the best $197 you spent in your life. And I'll tell you why. By the time you go through this webinar, you'll be the one telling me, Mr. Achu, thank you. This webinar is supposed to be over $1,000. I am grateful that you gave it to us at that price and you made us join it. Trust me, let me tell you, what most people really need is not additional knowledge. That's not what most people need to invest. Most people know that you should invest in an index fund. Most people know that you should invest for a long period of time. What most people really need, number one, is clarity as to their situation, as to what to invest and how to invest. The second thing most people need is a community, is a coach who can help give them clear directions so that way they don't have to make doubtful decisions. They don't have to feel overwhelmed. They don't have to worry about guessing. The third thing is a community of people who are heading in the direction you are headed. Because when you join this webinar, you will also automatically join my private invite only community where you have like-minded people who are building wealth brick by brick, who are avoiding guesswork, who are avoiding taking unnecessary risk, who are building a solid nest egg and then know for sure that at the time they need it, it will be available to them because of the strategies we've implemented. I hope to see you on the inside. Be well, be blessed. And if this video has blessed you, share it with somebody. Also, subscribe to this channel, right? share the video, subscribe to the channel, and I'll see you in the next video. Until the next time, be well, be blessed, and by all means, never stop being a blessing to somebody. Bye for now.